Hello and welcome back to the Dividend Experiment, the channel that can help you build a sustainable dividend portfolio. The content that we discussed is intended for information and educational purposes only and should not be considered investment advice or investment recommendation. In this video, I want to address some of the most common questions that I get on the Trading 212 pie, such as, if I invest this much into the pie, how much will I get in dividends? And how much do I need to invest to get this much per day? And in fact, this can all be explained using the same formula, but first let me give you the background fundamentals for those of you who are completely new to dividend investing. So what is a yield? The percentage of a company's market price per share that's distributed to shareholders in the form of dividends is determined by the dividend yield formula. So if we break that down to a very simple example, we have a stock that's worth $100 or pounds or euros or whatever, but I don't have the pound or euro symbol on my keyboard for whatever reason, so let's stick with dollars. And let's call this stock XARM PLC. This stock, XARM PLC, pays its shareholders $1.25 every quarter, so every 3 months, and that means it's 4 times per year. Doing some quick maths, that means that it has a $5 annual or yearly payout to everyone who owns the stock. So all we need to find the yield is those two numbers, the stock's price, $100, and the stock's annual payout, $5. Now we can divide the payout, $5, by the stock's price, $100, and we get 0.05, or in other words, 5%. So XARM PLC has a dividend yield of 5%. Easy. But one thing that we should notice is that the stock price changes every day, or every day that the market's open at least, so as one side of the equation changes, the result will change too. This means the yield actually changes every time the market opens. So two investors can buy the same stock and it yields a completely different amount on their original investment, depending on what time and price they bought it at. Another point to make is that sometimes companies increase the amount they pay out. Let's go back to our example of XARM PLC. The company sounds like it would be in the industrial sector, maybe arms manufacturing or something. So let's say that the US decided it's going to increase its defense budget this year, and they agreed to some lucrative contracts to XARM PLC. XARM PLC makes more profit this year due to these contracts and wants to pay it out to shareholders in the form of dividends. Management make an announcement and they'll now pay $1.50 each quarter, so every 3 months, 4 times per year. And this means that they now pay $6 a year, so if the stock price is still $100, that means the yield is now 6%. Perhaps investors see this rise in dividends and the lucrative defense contracts with the US government, and they think they want to be part of the company and invest in it. So if there are more buyers than sellers, the price of the stock will rise. If the stock rises to $120 due to investors' excitement about the prospects of XARM PLC, now the stock has a dividend payout of $6 and the price of the stock is $120, so we divide 6 by 120 and we're back at that yield of 5% for XARM PLC. But how to calculate the yields for multiple stocks in a portfolio? So that all makes sense for one stock, but what about when we're buying a basket of stocks, an ETF or a Trading 212 pie, or just calculating for an overall portfolio? It gets a bit more complicated when more than one stock is involved. Let's say we have an equal weighting, so 25% each, and a dividend portfolio of 4 stocks, just to keep it simple for now. And these stocks are Stock A, which pays 2% per year, Stock B, which pays 8% per year, Stock C, which pays 4% per year, and Stock D, which pays 6% per year. So 4 stocks with varying yields. How can we find the overall yield of this portfolio? What we have to do is multiply the weighting of the portfolio by the yield of the individual stocks. Then we can sum them all up to find the overall yield. So in this case, we would need to do 0.25 times 0.02, 0.25 times 0.08, 0.25 times 0.04, and 0.25 times 0.06. So use a calculator if you want to save time, or if you're a maths pro, you can do it in your head. But either way, you should come up with a total of 0.05, which translates to a 5% overall yield. Now, if that same investor decides stock A and B have lost their way and wants to sell them off, to invest them into stock D. So now the portfolio is 75% stock D, which pays 6%, and still has 25% on stock C. So let's do that calculation again. 0.75 times 0.06, 0.25 times 0.04, And if you sum up the total of this one, you'll reach a yield of 0.055, or in terms of yield percentage, 5.5%. Obviously, this gets even more complicated the more stocks you hold, as there's even more calculations you need to do, but the principle is exactly the same, even for those 5,000 plus stock ETFs. So what's the yield of the almost daily dividend portfolio? The last time I did this calculation, shown above, it was about 0.032 or 3.2%, or close enough with some rounding. As we saw earlier, the yield actually changes slightly every time the market's open due to the changes in share price of all the stocks. Right now, as this video could have been made a while ago and you're only just watching now, the calculation could be slightly different, and you're welcome to use the above method to calculate the exact yield right now of the portfolio. Alternatively, there are some software and portfolio trackers that can estimate your forward-looking yield, or calculate your yield from payments that I use and can recommend. Check the link in the description for the most updated recommendations, as again they may change depending on how long ago this video is made and how competitive the offerings still are. How many dividends will I get if I invest this much? Now we have the yield of the portfolio, we can use this to answer the common questions that appear on the chat feed for the pie. If I invest 1,000 into this pie, how much can I expect in dividends? Now we have the yield, this one's easy. We bought 1,000 worth of a stock, so we just multiply it by the yield, 3.2%, or for the calculators, 1,000 times 0.032. So if you invest $1,000, you can reasonably expect $32 of dividends per year. And then, to work out how much per month, you just divide that by 12, so in this case, $2.67 per month on average. Though it is important to remember that the payouts won't be equal each month, as the pie components vary on how much each one pays out. Now, the slightly harder question, I want $50 a month, how much do I need to invest? We need to reverse engineer the question now, as we have the payout and the yield, but not the original amount invested, and that's what we're trying to find. So what we need to do is find the annual payout required. $50 a month would be $600 a year, and then we divide the annual payout by the dividend yield. In this case, it would be 600 divided by 0.032. And if you put that into your calculator, it should come to 18,750. And there you have it. You can replace any of the numbers used here with whatever numbers you're looking for to find, as it's just a case of rearranging the formula and plugging it in once you know the required amounts. I'm attempting to make these videos for all of the commonly asked questions for the Trading 212 Pi, and more, so if you want another hot topic to be addressed, then let me know in the comments below. Also, if anything wasn't clear and you need some more help on understanding, feel free to comment, and hopefully either myself or maybe some other watcher, viewer, commenter can help figure out where the misunderstanding is. Investing is much better when everyone has a better knowledge of what they're trying to get into, and it's one of the fundamental legs of the metronome model that I tried to create. I hope that this was useful for you. If you liked this video, and if you made it this far, I'm guessing you probably did, then I have some good news for you. I'm giving away my PDF guide to the 10 dividend investing commandments, or the criteria that I use to pick dividend paying stocks, and I'm giving it away to you for free. All you need to do is submit your email in the link below and it'll get delivered to your inbox straight away. Again, that's for free. But that's not the only benefit of joining the email. You also get updates on the almost daily dividend portfolio, interesting stock ideas or news, and special deals and free stuff that I can share with you. Thanks for watching, and I hope to see you on the next video. See you!